Good morning, good morning, good morning, everybody, and welcome to FOMC Wednesday. We're here. We're here, and not going to waste your time. Going to go really quick over where we came from and exactly what you've got looking ahead of you into the meeting today. Really quick, we will zoom through this, and I keep this up here because I agree, and I've agreed since the beginning of the year, where I was actually looking for 2 rate hikes this year. I'm not betting on it I won't say I'm not betting on it, but I'll just say I have a small inkling to believe he won't cut rates today. That's all I'll say. So, anyway, bring you on in. Oh, we've got to zoom it in because I was not ready for this. Going into today, Wednesday, September the 18th. 1, 2, 3, 4, 5, 6, 7. 7 green closes in a row. Like I shared with you before, you can get 7, you can get 17, you can get 27. It doesn't fucking matter. What matters is when you start getting 3 red closes in a row. As you see, well, maybe you don't see, but these green closes are getting smaller and smaller and smaller. So I will, against my own rules, I will have a spread trade out there just like yesterday's, which we'll go over in a minute because those 56.40, 56.35 bearish call spread as we closed at 56.34.58 ended not only full credit but greater than 233%. They were 350 prior to the open when I had sent the email out. But I will go back over here on to your spreads, showing you that. 5:12 in the morning, we got started. 5:34, talking about 56.55, 56.50s. They were 250. I did see Nancy get into them at 350. Congratulations, you all got your full credit. And your fuck around, find out risk for the red close minus 56.33, being the 56.40, 56.35s. 350. Obviously much greater than that. And then after we got our reports that came out, ba-bang, 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 like I said here at 8:56, it's very difficult to see a plus 20-point gap up on SPX close red. So, had our safe edges out prior to the open, bang, 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 knew where our open was, Nancy again, and I shared this because I fully support this trade. 56.75, 56.70s at $1.75. Ba-bang, ba-boom, ba-bomb, ba-bing. And at 12:51, which I'll get to in a minute here, is where I allowed you, or at least advised you, that you can put cream on your swollen asshole from puckering all morning. And I see that it obviously went over well. On the alert page, as I shared here, VIX 1811 is here, 12:52. Feel free to scalp off your precious 0 DTE puts if you want, because that's where we had gotten to. And as I will move a couple of things around and bring you that up, because we were trading and looking at the 5600 puts, you were going anywhere from $2 to $1. Some of you got better than under $1. 1251 was where we peaked, right there at 590. So I'm not too bad at this big video game that we play. So QQQ again. QQQ got a green close, closed under the open, closed red the day prior to that, but again, you're just hugging your 473, which we'll get to in a minute, and IWM having the big day yesterday. The big day, visiting up there into the 220s, hovering just below 220 with that 221.41, I believe, is the pivot I spoke about. Not necessarily anything random or chronological to look at with the IWM, but again, we look over these things to see what's going on and where we're at. So I'm going to go a quick review over the charts, and then after that, we will go to what we need to. SPX Looking here at the 51.19.26. Bang, bang. Looking here at AB. Did not be ABC. This was your 1. This was your 2. Seeing a very clean 3 as we were up here in the 56.40, 56.50 area. Got your dip. 4, -4, right there. There's your wave 4. And from here, I am very zoomed in. Very, very zoomed in because you kind of have to be. And we will go with 10 days, 10 days, 10 days, because we want to be able to see this as closely as possible. As a 1, 2, 3, a very, very, very shallow 4. As you remember now, we have now 3 days we have not broken below 5,600. 3 days now, Monday, Tuesday, and Friday. We have not broken below 5,600. We have that little tiny fractional gap right below 5,600 from back here on Thursday, which I'll show you in a minute. Got your gap up, and bang, right back down, holding above 5,600, but again, under that magical 56, 36, 38, 73. It's the greatest video game you could ever want to fucking play. So play it. Play it like a fucking champion. So I will here draw you on to what I watch. And like I said here, as far as what we're looking at, bing, this one tiny little gap right here, 5,600, 55.95. In any event, 55.63 awaits just below. So moving you on, again, QQQ, as you see here, you continue to just come up here and bang your head. Right there, 475, 474, 471, holding you steady, not letting go as of yet. But you look out at QQQ from a wider view, which looking here at DIA, you can see your wider view. Not, can I? Yeah, I can. So here, looking at DIA coming off of the May lows, okay, I'm going back to the April lows when this wave started because they're not in the same waves. Boom, boom, boom. I see a 1, 2, 3, a 4, and a 5 without any... I have no concern over DIA whatsoever, with the first gap being this one right here over the weekend to 414.94. The big 412 sitting right there below it, and in the event that we do get some exuberance going into the end of the week, there's a very strong possibility for that 408, which used to be 407 before we had to move the Fibonacci's, and now is probably 409. So anyway, below 412. So the QQQ, I bring you onto the wider view, and looking here at your gray dots being, this is where me claim this to be my resistance support area, and it has worked very, very strongly, very good, and very well. As you look over on your SPX, zoom you out, 90 days, all-time highs, back to a brand new all-time high by a couple of pennies. You ain't getting any of that out of your QQQ. Your legs, your 47% of 7 stocks making up QQQ, the same 7 that make up greater than 20% of the SPX, you're not getting it. You're not getting your QQQ. And this is why I continue to focus on QQQ, because this is where it's all at. This is where it has been at. This is where it continues to be at. So I can leave this and bring you on to the email, because again, with this being FOMC day, one thing that you want to do other than not placing any trades until after 2 o'clock, the only way that you can place trades after 2 o'clock is if you are 100% focused, 100% zero distractions. And for those of you that have a job...
Do you not want to be at work today? Just shit your pants. Shit your pants. What are they going to do? What are they going to do? You just shit yourself. Shit your pants. And then go home. And have a good day off. That's what I would do.
And the other thing that you want to do is put the exact amount of money that you want to risk, and don't deviate from that. the exact amount of money that you want to risk today. You need to have that number, and that number has to be concrete, and it has to be there ready at 2 o'clock, 2:30, when we get the shake and bake and when we start to get the move and groove. So from now until 2 o'clock, from now until 1:30, do whatever the hell you want to do. Do anything that's legal. Legal. Not telling you to go break the law, but, there has been some things that can be adjusted. You could go see your gender reassignment doctor. You've got time to do that today. You can go, make a schedule with your mechanic and change the windshield wiper fluid. There's a lot of things that you can get done today between now and 1:30 in the afternoon Eastern time. But as I've shared with you here in your email over the weekend, and I've covered from other times before, these are your rate cuts over history. Your first rate cut. Here's your first rate cut. This rate cut in 1995, the mid-cycle adjustment, being a mid-cycle adjustment, having already started cutting rates over here back in 94 and 95, looking for that soft landing. 1998, these are your rate cuts when the global currency crisis kicked in with the Thai baht, after we had already been crashing from that July high. Come on over here into 2001. 2001, when the dot-com bubble burst, already on the way down, already a year almost from the all-time highs, and they start cutting rates. And rate cuts, they just don't work. They're not a bullish catalyst. Here it is, 2002, 2003, cutting rates right after we bottomed, 18 months since the all-time highs. Where S&P's already down 50%, 50% from the dot-com highs. And they're cutting rates. So look at this for what it's worth. And again, we come here into 2007. You don't need to be a rocket scientist. How you had the all-time high tag over here in July, and then when you come over here and you place a fractionally higher all-time high right here in October before the shit starts hitting the fan. Then 2019, everyone remembers how we were short here in September, Christmas, day after Christmas, day before Christmas, because the market's closed on Christmas, screaming to everybody, hey, buy the dip because we're down 20%, we're down here, we're perfectly hit. And this is after they cut rates, with the other rate cut coming here in September of 2020, 2019. I don't have the 2019 chart, but as you can see here, September, this is going into October. That view right there, I'm going to cover it in a minute. So that's what you got. So here I'm looking at I'm looking at August 1 into Halloween 2023. Right over here, September 18th, right, this candle, this big red candle, I don't think you can see it, but this red candle right here, this is the FOMC meeting of last year on September the 20th. Come over here onto 2022, this starting here from August the 1st. August, I don't know what the hell, 16, 17, 18, some shit like that, where we placed in the high. Here's the middle of August, where we bottomed out at 34.91. And as you guys that remember from 2022 that were here with me, we were long on that bottom right there. That bottom right there was the first ever 400% credit spread that we did. Come on over here onto your 2021. August. Here is your September high, 44.45.85. And here is your October 3rd low, as you see the continued pattern of how Septembers into Octobers have tended to work. And here you go back to 2020, where the high was placed on September the 1st. We bottomed there at that 32.09 middle of September, right after the FOMC meeting. Baby bounce up there to 35.49.85 in the middle of October, and then right back down to it. And then they announced that Joe Biden had won, and Pfizer created the cure for COVID 2 weeks after that on November the 9th of 2020, and everything else is history. So again, it's your FOMC meeting today. I will not be active in the chat room, not whatsoever, until we get closer to 1 o'clock, and then we start proceeding into the FOMC meeting from prior to the opening bell until we get to 1:30, 2 o'clock. do anything that you want other than push buttons into trades, other than the credit spread, which I'm about to share with you here in your email. Enjoy your morning. Enjoy everything about it. And if you do shit your pants so that you don't have to be at work today, at least don't wear a nice pair of pants when you go to work.
Oh, nice. Good shot.